All right. All right, sir. Thank you so much for taking out time for us. Always good to get perspective. Now let's welcome in the management at Tata Power. Dr. Praveer Sinha, CEO and MD at Tata Power, is with us. So, I mean, when we talk about the Q4 numbers, there was a solid realization as far as coal business is concerned. Can you start with that, and what is your outlook for the coal business over the next couple of quarters?
So, thank you for having me on the show. You're right that we have solid numbers, but these solid numbers are not only in the coal numbers, but also in all our existing operations. Our generation have done very well, much better than last few quarters. Our transmission distribution has done very well. Our renewables have done very well. All our renewable plants have been generating a very good capacity, including our wind portfolio, which earlier used to have a challenge. They have done very well, exceedingly well in this quarter. So I think overall we have done very well. Every one of the businesses have supported the overall profit that has come. And I think what is important is the consistency with which we have been showing the growth. This is in fact the 11th consecutive quarter in which we have shown the PAT growth. And we expect that this will continue because the operations have stabilized. Huge amount of improvements have come in our operations and also in cost efficiency. And all those benefits are accruing today, and we expect in future quarters similar trends will be observed.
Right. Coal business, given the spike in coal prices, ESG focus, is there any plan to offload any stake in these Indonesian JVs?
We continue to examine all these things. It all depends on what sort of valuation one would get. As all of you are aware, we had got the license renewal in December, and based on the new license, we have a 10-year mining license, and which can be extended by another 10 years. So I think our coal operations is going well. At the right time, we will look at the opportunity, but this is something that we keep on observing and keep on monitoring on a regular basis.
Hi, Mr. Sinha. Good morning. Let's also talk about the other side of the earnings and the disappointment this quarter, as I look at the fine print, was the EPC business, where Tata Power Solar and Tata Projects both reported a loss. What then is the outlook on profitability from here on, and when do you think these businesses are going to turn around?
So, Tata Projects had a negative impact last quarter as well as in this quarter, because what we do is we look at it from a long-term perspective as to what is the cost to completion. And we made a provision of losses in the last quarter as also in this quarter, considering the type of projects that we had, and in some of the projects there was a little bit of a stress. We have, based on our understanding, cleaned up that, and going forward we do not expect any further impact which would be there in the Tata projects that they are implementing. We have also looked at it from the perspective that now that the cost of commodities have come down, we are in a much better position to handle it, and going forward it should be making profit. Similarly, on the EPC for renewable, last quarter again we were expecting that the prices will soften based on the various reports that had come from China. Unfortunately, the prices have not come down because the COVID impact continues to be there in few places. Similarly, we had a huge challenge in terms of the forex losses, and the increase in and the devaluation of the currency adversely impacted us. We expect that now that we have done 100% hedging for all future procurement, we will not be in a position, we will not have any similar position in future, and we will be able to address this.
Good to hear that. On the renewables business, Mr. Sinha, you've announced a capex plan of about 10,000 crore rupees for this year. Tell me a little bit more about what's your expectation in terms of growth in this vertical, given that that has been a bit volatile.
Yes, we have huge plan, and this year our capex is total of 14,000 crores, out of which majority of it, nearly 10,000 crores, goes for our renewable business. This will be both for the utility scale projects that we are implementing, and they are all in pipeline. In fact, in the first quarter itself, we commissioned nearly 250 megawatt, and another similar capacity commissioning is happening now. And we expect that in this year we will add another 500 megawatt of projects. Apart from that, we will also be setting up a manufacturing facility with an investment of nearly 3,000 crores. So all put together, the 10,000 crore investment that we will be making will help us to further improve our availability of power generation capacity, and that will also enhance the overall capacity of the company.
Good morning, Mr. Sinha. This is Nayantara who's also joining in. Yesterday we've also seen an important announcement from the Competition Commission of India, which has blessed that deal of BlackRock as well as Muttabana Investments. Talk to us more about it. Now that approvals have also started to come in, when can it close? When will we see the money come in? What exactly is the plan going forward?
So this was the last of the approvals which was pending. Now that it has come yesterday, we expect in next 2 weeks to complete all the transaction, and the first tranche of the money can be expected by then. And the second tranche, of course, will come within 6 months thereafter. So I think we are very much on track and to complete this transaction and carve out a separate company of Tata Power Renewable, which will implement all the renewable related businesses and the green businesses that we will be carrying out.
Mr. Sinha, of course, this is a larger trend that we're seeing across corporate India, and in fact, to be fair, globally as well. How the subsidiaries are being set up for renewables, for greener energy. The ESG barriers are also therefore, met. ESG allocations of funds are also met. So after you carve it out, how independently will it function? Will there be more capital raising? Can it be listed separately?
Right now, whatever divestment we had to do, we have done. The money that will come will be adequate for the growth for at least next 2-3 years. And based on how the markets reacts to this investment, as also the opportunities that come in future, and especially considering that last week only Government of India announced the revised RPO obligation going up to 47% by 2030. There will be huge opportunity that will be there for us, and we will definitely be a big player in the renewable business going forward.
Right. Right. When we just talk about, going ahead in terms of investments in power, you mentioned about ESG, renewables, coal business, coal, everything. Where do you see the capex in the power sector picking up? Do you believe that elevated prices, demand for better power will continue to keep capex in the sector ongoing across various players?
Absolutely. I think the way the power sector has been growing in last few years, especially in last 1 year, and the demand has gone up by nearly 25%, there is great opportunity for the Indian industry and for India to really leapfrog in the renewable space. I think India has taken a very ambitious target of 500 gigawatt by 2030. The RPO obligations are there, and that would mean that there would be huge investment in renewable space. And when I talk about renewable, it's not just solar or wind, but the whole lot of renewable systems that would be there, including storage and hydrogen. There would be huge opportunity in decentralized usage of renewable, that is rooftop and solar pumps. And there would also be huge penetration of electric vehicles. So I think there is a great opportunity over there. To cater to this requirement, there would be a lot of transmission system that needs to be upgraded. So there will be large investment that will come in transmission business. And similarly, the distribution system has to become smarter. So the smart metering program of government has also improvement in the distribution system both in terms of reliability as well as customer service will be a very, very important thrust. So I think Tata Power is very well poised to take benefit of all these areas where opportunities are coming, and you would see substantial growth in Tata Power in the coming quarters.
Right. Can you just talk to us about the distribution business as well, the sort of amendments that we've seen in Electricity Act? What does all of that side of business mean?
Well, it means that the distribution sector has to undergo huge transformation in terms of the quality of service that it provides to the customer. There are a whole lot of changes which is happening, and the customer expectation is going up. So reliability, 24/7 availability, and real-time information available to the consumer, smart metering agendas, smart grid agenda. So all these things will make India and the Indian consumer aware of what are the latest technologies and the benefits of utilization of energy. So I think there is a great opportunity for India to leapfrog into the space of smart grid and smart metering. And we expect that the way the power sector has been working, especially the state discom, they will go through a change in terms of management, in terms of services, and a lot of money will get invested in those areas.
Mr. Sinha, great to have you today on ET Now, and thank you so much for patiently taking all of our questions and answering them.
Thank you for having me on the show.
Thank you. That's the word coming in on Tata Power. Let's just bring up that stock price for you. Languished a little bit and hasn't seen much of a recovery actually. A little bit, yes, but early days yet. 2.5% lower is where Tata Power is currently at. In the meantime, let's get you an ET Now exclusive and sources tell our channel that reduction in gas supply by GAIL may hit domestic production of urea. In fact, we understand that the government